Good afternoon. Thanks for joining us today. We have an update with Akiba, CEO of Mako Mining. He's going to walk us through the Q4 production numbers as well as the exploration results that they've had recently, as well as the plans for the year. I believe the company just announced their budget, which was $17 million for exploration, which is bigger than I've ever seen Mako explore in a year. So looking forward to hearing about that. As always, this presentation will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's presentation on the website. And there will be a Q&A section, so feel free to input your Q&A in the box at the bottom, and I will endeavor to read them. As some of you may notice, I don't have my glasses with me today, so I don't know where they are, somewhere around the house. Anyway, Akiba, thanks for joining us.
Hey, you're welcome, Deb. How's it going?
I can see you, so that's a good start. So I think you just got back from site recently, right?
Yeah, I was there last week from Monday to Thursday.
Right. Well, looking forward to hearing what's going on. Maybe you could start with some of the Q4 numbers.
Sure. So we're going to be reporting them officially with our audited financials probably the third week of April, and then either immediately before or immediately after those, we'll issue our Q1 operating results that will come there. So Q4, especially towards the latter half of the quarter, we were operating at what I would consider to be steady state. Really, December was the first month that we were above 500 tons per day as the mine and plant were designed. And then Q1 for the full 3 quarters, we would be averaging well in excess of 500 tons per day net, and that is inclusive of availability factors to the mill. So the plant from a throughput perspective couldn't be operating better. The mine really for the last year and a half has been outperforming, not only in terms of throughput and what we were able to extract from the pit, but also from a grade reconciliation standpoint. So I'm actually very happy with how our resource came together on this rather complicated ore body over here, but we were able to get the geological model down right. We were able to model a very conservative resource, and then the data that's coming out of the 2 pits that we're mining right now are exceeding our expectations in terms of our ability to extract gold from what is the highest grade open pit mine in the world. Now, San Albino and the operations that are coming from it was really just one step out of 3 in terms of growing Mako into the business that we wanted it to grow into, really going back since 2019. So firstly, we needed to get the 500 ton per day operation up. In Q3, we generated approximately $7 million of adjusted EBITDA. So that's before exploration spending on that. And in Q4, that number is going to be substantially higher than that roughly $7 million. And this is important because that allows us to have the cash for everything that we need to invest in our next 2 stages. Secondly, to expand our operations to 1,000 tons a day. And in order for us to do that, we're going to need to bring in really a separate mine within our current concessions. So San Albino as a mine itself, it's going to be impossible for us to have a steady state throughput of about 1,000 tons a day just from the 2, 3, possibly 4 pits that we're going to be mining over at the direct San Albino area. But we do have an area to the south called Las Conchitas, and we potentially even have an area to the direct north over at San Albino North, where each one of them can independently provide us that incremental 500 tons per day for us to make the decision to expand to 1,000 tons. So all the civil works and engineering has been complete for the expansion to 1,000. We've laid the foundations for an additional 5 carbon and leach tanks. I would put the incremental CapEx, so specifically on the plant and the associated works that need to go with that, at less than $5 million to do the expansion. But that decision will be predicated on us having clear, visible, and sustainable ore that will allow us to expand from 500 tons per day coming from the mine to 1,000 tons a day to make sure that we never have to slow down the mill. Hopefully, we're going to be in that position to make that decision by the very end of next year when we have our maiden resource over at Las Conchitas, initially at a small part of it over at Las Conchitas South, which is the most advanced part of our Las Conchitas property, which is probably about 3 or 5 times the size over at San Albino, and then eventually to bring in even additional mining fronts elsewhere in our property, which leads us into the third objective of the company, is that we do think that we're sitting on an orogenic gold mining camp over here, a very disparate type of geology than you'd find elsewhere in Central America. We've put out some a little bit more than prospecting results. These are in situ channel samples that we had because we do have access to underground workings over there for the small scale mining community that exists in parts of our concession package as far away as 21 kilometers from the mine. And being able to access that underground infrastructure, obviously small scale underground infrastructure. These are small mines that on average are producing about 1 ton a day, to put this in context. So we were able to go inside in these small mines, see the veins, visually take samples along the face, and then with estimates of true widths. So really seeing the actual vein morphology, we were finding grades as far away from the mine as 21 kilometers in excess of 100 grams over a meter. And with these access to underground workings in certain areas, we were able to scope out a pretty significant amount of strike and dip potential, even without putting a single drill hole in. So that's really the next objective of what that 500 ton per day plant can do. It's the cash flow can not only be used to expand our operations to 1,000 tons a day organically, but it can also be used to finance what's now going to be a $17.2 million exploration program that will involve 7 core rigs and 2 reverse circulation rigs. So we now have 6 rigs over at site. 4 of them are turning. The other 2 are actually at site, but we're waiting for a crew right now. And then by the summer, we're going to have 7 core rigs and then 2 reverse circulation rigs. Those latter 2 are really there to guide us for our core program. So those RC rigs are not there for public consumption. They're basically there to do a quick and dirty survey of our ground, go down to about 120 meters from surface, take our chip samples. And if we find some areas of higher grade gold, then we'll follow it up with core, and those will be released to the market in due course. So we've actually moved one of the 4 rigs that are turning right now to the San Albino North area, which is completely virgin ground. We don't have controls over the geology. I think we're going to be completing our first hole on that this evening. But look, if we hit even at some place, and I'll go over each one of these properties in a little bit more detail at the latter part of this presentation, but if we hit there's another San Albino. So there's a lot of low-hanging fruit for us to be able to replenish what we have over at San Albino in a multitude of areas. So frankly, the $17.2 million program was designed not because that's the limit of the number of targets that we have, but it was really constrained by our human capital. It's not even constrained by our financial capital. The mine is going to be generating a lot more than that in free cash flow, but really our ability to recruit additional geologists and be able to intelligently process that data. We really can't be drilling much more than what eventually will be about 120,000 meters a year, inclusive of those RC drills. With the team that we have, even an expanded team with the human and physical infrastructure constraints that we have. And then lastly, the last thing that 500 tons per day mine is doing is providing us enough cash flow to replenish the balance sheet. So we repaid a lot of debt since the end of Q3, our last financial numbers. You'll see that some in Q4 and then a lot in Q1 when we report those numbers at the end of May. So really this mine, that first step that we've had as part of our business plan allows us to organically fund everything that we wanted to do over at Mako. So Mako in its current iteration really started at the end of 2019. You can kind of see it in the stock. It was really kind of a switch. So I'm not going to go over the history of what happened before Mako, but the merger that created the company happened at the back end of 2018. And then through a series of management and board changes, effectively the controlling shareholder Wexford Capital took control of the company in August of 2019. And then from there, we were able to institute this 3-stage plan, have the ability to go and finance that plan. We put in US $40 million of equity and additional $15.5 million of debt to not only build the mine, not only to continue the exploration, not only to remove some liabilities that existed at a Mexican asset that the company had, not only to pay G&A, but everything. And now the mine is generating free cash flow, and we're repaying that debt in a very quick fashion. So a little bit about the team. I think everybody is familiar with me. I don't know how many of you have met Jesse, but Jesse and I work together on numerous mining projects. He's a very, very skilled operator. He's built a multitude of mines, small and medium scale mines in the Americas. A very, very good hands-on operator, and it's good when you're dealing with a small mining company like this with a lot of moving parts. It's very important to have an operating team that is hands-on, so to be able to pivot on a dime and then be able to correct errors as we need. It allows us to be, I would say, more entrepreneurial than some of the other mining companies that you experience. And we're able to do this in a way without, frankly, screwing up our operating objectives. I've been I don't know if surprised is the right word, but it's been pretty astounding for small scale mines, our peer group, if you will, in terms of the results that have come out over the course of the last 6 months. They haven't been good, really. And part of that is on the type of assets that a lot of these companies are managing. Part of that is just in the nature of not having appropriate skill sets to be going and delivering these small scale mines. In many respects, small scale mines can be more difficult than medium and large scale mines, just because they tend to be undercapitalized, and the types of people and teams that you can recruit to go and manage them become challenging. And so mistakes happen. And we've seen that kind of in droves across a lot of our peer group. And I'm happy to say that with respect to Mako, we established this three-stage plan back at the end of 2019. So certainly before the pandemic. It was before we had two major hurricanes over in Nicaragua that hit us during construction. And we were able to manage a very challenging environment in many ways, unscathed. Like, for the ability for us to deliver and execute on our operating objectives going back to 2019 were more or less as we underwrote them. And I hold that up against just about anybody in our peer group right now, certainly for companies our size. And then Millie, we hired as a CFO at the early part of 2021. She's been here a little over a year. She's been fantastic, kind of supplementing the team with the ability to actually process numbers and data, which was certainly something that was lacking prior to 2021 within the organization. And then we're supplemented with excellent geologists. So Frank, who's our senior geologist, has been working on projects big and small throughout his career. He's a very good hands-on geologist. He kind of knows the path from discovery to the ability to actually put things into production. So it's very good working with somebody like that. And then Zoran has been fantastic. He was, I think, employee number 3 over at the predecessor over at Mako, maybe even employee number 2. So he's been from the project basically from the start. So the amount of institutional knowledge that he has with the project is fantastic. So the ability to use that knowledge in our early stage exploration program, and then use the information that we're getting from the mine to kind of supplement some of the ideas that we have on the early stage stuff is tremendous. The ability for us to use all of the data and knowledge that has been assembled from our team, both those that came from Golden Rain and those that came from Marlin, really is a very valuable asset for this company, and be able to integrate it together in a pretty seamless fashion. So we're in Nicaragua. Nicaragua is a wonderful mining jurisdiction. We've operated in the United States, in Mexico, in Nicaragua. Our team has operated in a multitude of other jurisdictions. The ability to take a grassroots discovery into production with the community and government support in doing that, I put Nicaragua at the top of the list in being able to get a mine up and running. Nicaragua has its challenges. There's no question about that. But when you look at this purely from a mining risk perspective, I've been ecstatic about being in this country. So I would say that the country has a mixed reputation in the investment in the corporate universe. I think a lot of that is undeserved in terms of where it stands in the hierarchy of mining jurisdictions. So I couldn't be happier with where we are. I couldn't be happier with the community support that we have across our entire 188 square kilometer land package. Couldn't be happier with the government support at the ministerial level to be able to support us in being able to deliver this very important mine to Nicaragua. And without speaking for our competitors in the country, our competitors, I think, have done a tremendous job there, being able to bring their assets up and running in very short order, in an expedited fashion, and doing it responsibly, both from an environmental and social perspective. So I couldn't be happier than operating in Nicaragua than I have directly, really going back since 2014 and as management of this company since 2019. So a little bit about where we are. We always like to use the tagline, we are the highest grade open pit mine in the world, because it is true. So those types of grades allow us to run a relatively small plant in operation. This is only scoped out initially as 500 tons per day. But that still equates to a low 40,000 ounce a year run rate. And more importantly than a low 40,000 ounce year run rate. And this kind of warps people's minds a little bit, because I think the mining investor community likes to think in these simple heuristics. It's like, you're a 40,000 ounce a year producer, therefore you should be valued at this. There is a fundamental difference between the profitability of a 40,000 ounce a year producer with those kinds of grades versus other small scale producers that are basically just scraping by. This is a mining company that, with very, very, shall we say, without cutting corners on our ability to calculate all-in costs over here, we have the ability to generate $1,000 margins at these gold prices. So that's that 40,000 ounce a year number, even though that's our first stage over here, is actually a very big number when it comes to profitability. And it shows. We haven't raised equity since the summer of 2020. That was the last of the two 20 million equity tranches. We raised a working capital facility of $6.5 million at the beginning of 2021, where we had a very minor startup issues over at the plant. That's $6.5 million incremental of debt, even though it was refinanced, but we had over $6.5 million of principal repaid. So like this mine is able to generate enough capital where it can support ourselves. And then I'm looking at our competitors over there, their peer groups, said, yes, you're operating a mine, but lo and behold, you got to raise another $50 million for unclear reasons. So this is the type of asset where our 40,000 ounces a year of production are not the same thing as some of our peer groups, which are producing, or members of our peer group that are producing roughly the same. It's just a different ball of wax when it comes to grades like these, the highest grade open pit mine in the world. A little bit about our Q3 numbers. So we recovered just over 10,000 ounces of gold. We sold just under 10,000 ounces of gold for the quarter. That equated to approximately $5.6 million of operating cash flow. And that included our first pretty substantial check to the Nicaraguan government in terms of taxes that we paid them. There's a little bit of noise on these numbers because it was the first quarter of us transitioning from pre-commercial production accounting to commercial production accounting. When Q4 numbers come out, in addition to our cash flow numbers being higher than what it is over here, it's going to be a lot cleaner and a lot easier to understand. So there's a lot of balance sheet items just because things were moving around as we changed the accounting policy of the company from pre to post-commercial production. But it does show the robustness of this operation, where even from a mine that was still in startup in Q3, was generating enough cash to support the entire business objectives, replenish the balance sheet, and then even start the process of debt repayment, which is picked up in earnest, in addition to funding that $17.2 million exploration program that I'll go over in a second. And all of that turns into adjusted EBITDA of just under $7 million, again in ramp-up mode. Q4 numbers will be higher than that. And then now that the mine and plant that's operating at steady state, you'll see what our first stage of this operation is capable of doing. And then really the objective is to expand production and the plant at some point next year. And then effectively those numbers will double, if not slightly more than double, due to operational synergies associated with that incremental move from 500 to 1,000 tons a day. So now let's talk about the real meat of the company, which is really the exploration program. And again, this goes back to what I like to call mine myopia from the investment community, is that as soon as you have a mine, everybody has to focus, then you got to value these people as if the only thing that they have is a mine. We have always established Mako as doing this 3-stage program, getting San Albino up and running, at 500 tons a day to be the first step in us for the ability for us to expand it to be relevant and from a scale perspective in the context of global mining at 1,000 tons a day once we actually have different mining fronts established. But really the meat of our business plan, which was to prove that this is an orogenic gold mining camp over here. This has never been just about San Albino. It was always about using that as a leverage point to go and fund the rest of the business, so we don't have to go into this crazy business of always trying to look for the next dollar from the equity and debt markets over here. We have the ability to self-fund what we need to do. So currently we have 188 square kilometers of concessions under our belt. We have a lot of surface rights associated with it, not only with San Albino, but over at Las Conchitas, and then even now over at Segoviana. And we've done very detailed prospecting work going back since 2009 on our property. So a lot of these concessions have been gone over with a fine-tooth comb, and now we actually have access to a lot of the underground workings elsewhere in our property, and we're able to see how the vein morphology behaves. We're able to take samples. We're able to process it. We see what the grades are. We can visually see it, and then through the drill bit, we have no doubt in our mind that we're proving out an orogenic gold mining camp over here, and it is unusual to find orogenic gold mining camps like this with this type of data. At the end of the day, will contain less than millions and millions of ounces of gold. That is the prize over here. And all of that is self-funded with the operations that we've established at that initial stage. So a little bit about the geology over here. We have a modified long section on the next slide. These are very shallow dipping veins. They can dip anywhere from 0 degrees, so basically flat, to maybe the deepest veins that we've ever seen, probably about 45 degrees in our property, but usually it's somewhere in between. And that makes these amenable to open pit mining. We have a relatively narrow vein system. The average width of our vein is only about a meter and a quarter wide, but the average grade of our veins is well in excess of a half-ounce material. The San Albino vein averages about 17 grams a ton. You apply a dilution factor and then some above cutoff grades to the hanging wall and footwall, it takes our diluted resource grade down to about 9.5 grams over at San Albino. And we expect those types of grades that we're delivering to our plant that will be blended with some additional hanging wall and footwall material that's above cutoff, such that the head grades that we're going to be experiencing really from San Albino, Las Conchitas, and stuff that we find elsewhere in our property, we expect it to continue to where it is, which is probably somewhere in the neighborhood of about 8 grams a ton. And that's not just the diluted vein, but it's also mixing that with material that's above our economic cutoff over here. But the vein itself, this is half-ounce material. So to be a junior mining company with a relatively small scale mine, the ability to fund everything you need to do, and then all across your property, you are finding samples and evidence of economic mineralization that's grading well in excess of a half-ounce material as far away from the mine as 21 kilometers. It is unusual to find a company that has all of these attributes: a mine, the team to actually operate it, the capital to actually explore for it, and the data to go and actually find these targets. Really, and again, we're not limited by the number of targets that we have to establish a program of this size and magnitude. We literally are limited by the amount of people and physical infrastructure that we have to be able to run a program like this. We're not even constrained financially. Our mine is generating a hell of a lot more than $17.2 million a year to fund exploration, but it really is just a limit of what we're capable of doing from a team perspective at this point. So we are not limited by targets over here. The $17.2 million is really just scratching the surface of what we're going to be looking at on our property. So one of the biggest challenges of running a program like this is target prioritization, right? It's like drinking from a fire hose over here in terms of the data that's coming out of the property. So the first thing that we have to do is kind of segregate the property is what exactly is there from an advanced stage exploration perspective. And that means, can you find direct extensions of San Albino? Can you find something that is really in resource delineation mode, and to bring this into mill feed in the context of 12 or 24 months from now? So really the areas of our property that we're focused on over there are the extensions of San Albino, both to the northeast and southwest, as well as Las Conchitas South, which if we wanted to, we could put an inferred resource on that right now. And we expect to have a mineable resource on Las Conchitas South by the very end of this year. And our goal is to be extracting material this year on Las Conchitas South. So everything that you see in that salmon color over here are things that could be put into the mine plan in the context of 1 or 2 years from now. So that put that as kind of what the salmon color means. But we also have a lot of things in the mid-stage exploration. So things where we actually have drill holes in there that have hit in excess of half-ounce material over here, over mineable widths. Everything that we're targeting here is super shallow, so less than 100 meters from surface. And do we actually have hits that can then be followed up on and to do our initial resource delineation work? And that fits over at the Las Conchitas Central and the Las Conchitas North side over there, everything that you see in orange. And elsewhere, do we have samples? Do we have the ability that we know that there's going to be a valid drill target over there? And just because we have access to a lot of these small scale underground workings with very friendly small and scale and artisanal miners in the community, inclusive of one that we did a pretty substantive property agreement with, where we acquired his property rights over property ownership over time, is that we actually have the ability to go into these workings and scope out real low risk drill targets elsewhere in our properties. Everything that you see in yellow, we're going to make a discovery on one of those yellow zones. It's our objective to make at least one, possibly 2 discoveries this calendar year on them. And we're not just saying this because we're looking at kind of murky data. We're looking at it because we can actually see the veins. We just haven't put a drill hole in it. So we're very confident that we're going to be making a pretty material discovery at both La Segoviana and potentially Puerto Rio at some point this calendar year. And then there's everything else. I mean, there's just parts of the area that we've walked around and have taken samples and seen historical workings over there. But really, it's not to the level where it's ready for drill targeting. There's a lot more work that needs to be done, whether it's geochemistry or things of the sort, where we have to be a little bit more circumspect with how we're going to be delineating those targets. But it just shows that even after we spend the $17.2 million, there is so much left in our property that really is only there to scratch the surface. And this chart says it all in terms of what's happened with Mako and the predecessor company, is that the San Albino, the initial rediscovery hole happened in 2009, 2010. You can see in blue all the meters that were being drilled. The orange is Las Conchitas. Virtually, it was just a couple of thousand meters across a property that was 3.5 times the size over at San Albino. And then the company went dormant. And like, if you ask the people over at Golden Rain, they say, oh, well, we didn't have any money. It was a gold bear market. That was BS. These guys always had access to money. It just required asking it from me. And they never wanted to do that. So for a period of 4.5 years, this company was basically put on dormancy, like this pilot light on the stove over here, without anything moving, except for that blue program over here, which was a metallurgical program that we forced them to do. So it was a 4.5 year fight for us to get them to invest in exploration dollars and move ahead with the plant and the operations. And then eventually the merger kind of fixed everything. I won't rehash history over here, but the merger was the ability to release the assets as they existed and be able to finance them intelligently and appropriately. And when the management change happened in 2019, the gloves came off. And now that the mine is up and running and generating the types of cash flows that we are generating right now, the gloves are coming off even more. This is not a small scale exploration program. The $17 million is as big as a mid-tier mining company's exploration program for a year. And that should show you exactly what the level of targeting is. So even though this company has been around really going back for 13 years, really, you can see on this chart for 5 or 6 years, this was really just put in dormancy. So I would say the ability to deliver a mine, near mine resources that clearly are going to be developed over the course of the next year or two, and then the ability to actually process all of this target and data with an initial $17.2 million program is kind of unique for a company of our size. So let's go over a little bit about where these targets are. So we currently have 4 rigs turning, although we have 6 rigs sitting on site. They're actually in El Hicaro right now, although 4 rigs are turning right now. So we have 1 rig that's there that's focused on San Albino North. Now, San Albino North is on the other side of a structural fault. We got to change the name, San Albino Creek. It really is never wet. So from the permitting agency, this shouldn't be a big deal for us to get on the other side of it. But we have very little geological control on what's on the other side. We know for a fact that there's mineralization in the continuation at somewhere and in some direction of the San Albino ore body over here. We've put our first hole in there yesterday. So we're about ready to finish that first hole over there, over at San Albino North, probably by this evening. We hit something over there, there's obviously room for another San Albino. So to be able to double our mine. With very limited amounts of infrastructure that needs to be moved. We do have to ask for a permanent amendment in order to access the things in that green dashed line. So that's one. I mean, that would be a virgin discovery over here. I have to change a little bit about my frame of reference, because when I'm drilling in and around San Albino or Las Conchitas, I expect every hole to hit. Here, we do not have great control over the geology over here. So expect a few misses for us before we actually get control over the geology. But if we hit one, it is not going to be a small event. It's basically going to be in a position where there's a reasonable shot at us more or less doubling kind of the ore body that we have. And then we have an additional 2 rigs that are focused on an additional 1 rig right now that's focused on the southwest extension over at San Albino. And then there's 2 zones there. There's a deeper, super high grade, well-established zone over there. And then there's this zone on top that's a little bit kind of weird, where in some areas it's high grade, some areas it's low grade. It's not very continuous here or there. It's kind of a jigsaw puzzle for us to get to. Now, the reason why the upper zone becomes important is that if there's economic material for us to move up north, eventually you can have a pit that gets a little bit deeper and deeper and deeper. And then lo and behold, this very high grade continuous zone that starts at about 62 meters from surface comes into play, where you can actually open pit it. So we're in the process right now of putting the pieces to that jigsaw puzzle. And if we're able to connect, or at least economically connect the upper zones with the lower zone, you've got another 3 years of mine life over here. And it's fully open to the southwest. And in fact, I joke around with our geologists is that they put their core shack literally on the best part of the San Albino mine. So we had to move that. And then our mining contractor literally put his workshop right on top of where the southwest extension really is. I would say within the next 18 months, that contractor is going to need to move that workshop too. So I think probably one of our geophysical tools is find out where our geologists or mining contractors are putting their local infrastructure, and then drill right underneath that after they build it. So our next target in terms of resource delineation is Las Conchitas South. So Las Conchitas South, we would be able to put a resource around right now. There's a very continuous Bayakun zone, which is analogous to our San Albino vein, very continuous, really good grades, holds together. And then you have our Mango vein, which in a relatively narrow corridor, maybe about 120 meters of strike, you actually have these spectacular grades that are coming out of this. So Mango is a little bit like after that 120 meters or so, you want to re-get control over the Mango. So it's a little bit less continuous than Bayakun. But when you're in this chute, you're getting grades that are great. We put out a press release 3-4 weeks ago. It was showing 4-ounce material over mineable widths. We put out a press release in 2019 where we hit 12-ounce material over 1 meter. That was 30 meters from surface. This is open pittable over at Mango over here with some of these veins. So the Las Conchitas South area is also on a relatively small part over at Las Conchitas. So it's really just the start, but we have enough holes in here where we can have a definable economic pit. And I guarantee everybody's going to go through the same weird stuff that happened with the San Albino resource. When we put out resources to the public markets, we fully expect those resources to be met or exceeded when we mine. This is not a company that is going there to be pumping our stock with bullshit resources so that another company can take us out. We would love for another company to take us out at a high price, but the objective is to underwrite our business as we manage it. So when we put out resources, we need to make sure that we can have an extractable mine plan and make sure that there's not going to be any problems. And in doing that, the resources, we need to focus on relatively small areas and then expand over time. So I can guarantee the same discourse that happened around the San Albino resource in 2020 will happen again. It's like, oh my God, the resource is so small, blah, blah, blah. The resource was it was certainly smaller than what Golden Ring put out, but the resource was really only focused on a small area over San Albino. And right now we're approaching it on both sides of strike and dip potential to the northeast and the southwest, and going at it down dip as well eventually. Same thing is going to happen over at Las Conchitas. We're going to start over at Bayacun and the Mango Zone, have a very small area of the resource, but it will also be open over time. And eventually, Las Conchitas will be 3 to 5 times as big over at San Albino, but it requires a lot of drilling, a lot of effort, and a lot of work for us to get going, because at the end of the day, we're going to be mining it. Right. So it's like if we wanted to try to massage the numbers, which is frankly scarily easy to do in this industry. If we wanted to massage the numbers, we can. It's just not how we operate. So that's why you have a lot of our peer groups that just run into this problem every time, where it's almost like they believe their own BS, is that not only do they put out fluffball resources over here, but then they go ahead and mine it and wonder why they have problems at the end. It's like you really do need to get the data correct. And for us, we just do not have tolerances for operational screw ups. So we do have to take a conservative approach to how the resources are developed in this relatively complicated ore body, because we're going to have to be mining this ourselves as the way we underwrite this business. Now, a little bit on a slightly more early stage, you have the stuff over at Las Conchitas, which have drill holes, which have hits in excess of half. Look at some of the hits that we've had over here over at Conchitas Central and Conchitas North. You have 23 grams over 5.7 meters. That was probably about 20 meters from surface, 17 grams over 1.8, 12 over 3.4, 26 over 0.7. And you're starting to take a look at it, and it does not take a lot of imagination to show that there is continuity over here to be able to delineate additional open pits in these particular areas. I mean, a relatively funny anecdote about Conchitas North is like we're kind of running out of space in our current waste dump over here from San Albino. So both at San Albino, and then if we ever want to start mining Las Conchitas, we better have a much bigger waste dump on site. So we're in the process right now we've scoped out this perfect place. It's got a nice ravine. It's tucked away. If you wanted to, you couldn't ask for better topography to put a waste dump over here. But when our geologists were looking at it, it's like it was not well condemned at all. So before we put millions and millions of tons of waste material on top of this area, you might as well like put a few drill holes on some of the extensions on some of the hits that happened over at Las Conchitas North. Lo and behold, our first condemnation hole, CNB 22-01, condemnation in 2022-01 comes back with this beautiful vein. Like, so we'll probably release what the results are when we get them back from the lab, but I will be a betting man and say that the grades of that vein were probably in excess of a half-ounce material, literally right at the upper ridge of where we're going to be putting that waste dump. So we managed to get a couple more holes into that waste dump that actually either showed that it was either barren or there was some pretty significant vein replacement through a dike that was not going to be grading any gold over here. So we're comfortable that we're putting the material in the right place. But just shows you it's actually a challenge to find areas that are barren on our property for us to house our infrastructure like waste dumps. And then there's the new concessions. So over at Puerto Rios, we have stuff that's south of the river that will be the extension as part of San Albino North, but we've extended on the other side of the river through the lineaments an additional 6.7 kilometers to another river over at Puerto Rios. We acquired this concession back at the end of 2019. It was transferred over to us in 2020, and then we got drilling permits on it at the end of last year. It's never been a hole on it, but lo and behold, there's some really good samples, clearly some small scale miners that have exposed workings. It's mineralized across that 6.7 kilometers. And putting that in context, and this is the direct extension of the San Albino vein. Put that in context. The west pit over at San Albino, the San Albino vein, was only delineated on about 230 meters of strike. So this is about 26, 27 times the strike length of San Albino. I don't want to say that it is like a 26, 27 times the size of the mine. You're going to be finding a series of economic deposits across that strike horizon. But it just shows you that you are just scratching the surface of what some of these concessions can handle. By the way, that concession was out there. It was another public company that had it for years. but the predecessor company just did not want to consolidate it. One of the most important things for us is to make sure that we have a district scale land package, that we have the time, we have the capital to go and really find out what is on this orogenic gold mining camp, because every single bit of data is leading us into the direction that this eventually is going to contain millions and millions of ounces of gold. We have the El Jicaro concession, which frankly, there's only been limited work that's been done over there directly to the south. That was the second most advanced historical mine that was run in the 19-teens to the early 1920s, the El Golfo mine over there. The only reason why hasn't been a focus is because we want to acquire a lot of surface rights, and the guy there is asking a little bit too much money. So we basically said, all right, you do you. We'll focus on areas that are a little bit cheaper now. So eventually, I think we're going to have an agreement with him. But I think for the last 7 years, it's been a little bit of a pie in the sky ask in terms of what he was looking for the surface rights. So we actually have focused on areas like La Segoviana, which was a concession that was granted to us by the government in February of 2021. We got the drilling permits on that in December of 2021. We actually got the concession granted to us 2020 February. Got the permits granted to us at the end of 2021. And whoa, it's like some of the results that are coming out of La Segoviana are truly spectacular. There's out of all of the small scale mining on our property, the largest of them was this guy that we did this deal with. He's probably averaging about 2.5 or 3 tons a day, to put this in context. So that's about 4 times as large as like a normal small scale miner, but still it's 1/250th of the size of our first stage over at San Albino, to put this in context about what the size of these operations are. So we actually acquired in excess of a couple hundred hectares of surface rights from him. He was the owner and a legal and fully registered artisanal miner on our property. And then you go to the underground workings. There's exposures of 10-ounce material just sitting there in a vein. Obviously, the resource is not going to be 10 ounces. So you're going to be diluting that. But there is a lot of gold over here, where if you actually start taking a look at all of the exposures and workings over here, you're able to scope out a reasonable amount of strike and dip without putting a single hole in it. So that's why we are going to be making a discovery this year at La Segoviana and Puerto Rios, just because the data is supporting that. And hopefully by the middle to the end of the summer, we're going to be putting our first rigs over here, especially over at La Segoviana. We have the surface rights. I've told everybody at the company, this is going to be a mine over the course of the next 3 years. Within 3 years, this material is going to be processed, at least initially processed over at our plant. The area that we acquired, La Reforma, is about 18 kilometers away. So 18 kilometers away to our plant. We fully expect to be hauling material from here to our plant with an economic extraction plan with this high grade resource that we've been able to delineate through channel samples. And now that we own the surface rights, we expect the ability to exploit them to happen in pretty short order. And then there's just plenty of catalysts just on the table right now. It's like, look, we have a mine, it's ticking along. Like obviously we're in operations, so it comes with all the operational challenges that operations bring, but it's able to support everything. We're able to support our resource delineation work over Las Conchitas to be able to make the decision to expand production capacity to 1,000 tons a day, able to fund the $5 million of construction capital that will require to expand the plant. We'll be able to fund the $17.2 million exploration program that will require 7 rigs and two core rigs and 2 reverse circulation rigs, over 110,000 meters of drilling for the year. And we'll be able to use that data to kind of prove that this is an orogenic gold mining camp. We'll have the ability to repay all our debt. That debt is getting repaid very, very quickly. So at least with the Wexford component of that debt, which is down to about $7.5 million at this point, will get extinguished by Q3, and the remainder of the Sailfish loan will get extinguished by the end of next year. So we'll be debt free in a relatively short time frame, and then along the way, we're kind of even have excess capital to return to shareholders. We purchased exactly 1 million shares to date, and then we'll be opportunistic about that. But once the Wexford debt is repaid, we'll be more aggressive on that front as well. So that's basically Mako in a little bit more than a nutshell. And with that, I'll kind of open up the floor to any questions.
Thanks, Akiba. That was actually a really thorough overview, which we haven't done for a while. So I think that's helpful for anyone that's new to the story. I guess the one thing that keeps running through my head, Akiba, is as we see some of these companies come out with these extensive technical studies and other studies, we're seeing a lot of cost creep and inflationary pressures for some of the larger projects. Maybe you can talk about that whole theme and how it plays out well for Mako.
Yeah, well, obviously our plant was built and basically in terms of fixed infrastructure requirements, more or less, was finished the very, very end of March 2021. So there was probably a little bit of logistics challenges in the previous year from the pandemic and getting things into the country. But in terms of actual cost creep, we didn't experience that much. Certainly part availability was a big deal. Things certainly have changed over the last 6 months in that regard. From a consumable perspective, I would say ranges anywhere from 5 to 30%, kind of where we are on consumables. I would say one of the biggest challenges of making a decision to expand our plant is that when we first designed the engineering at 500 tons per day, we said, all right, so long as we have a 4-month lead time over here, we'll be able to get this up and running in 4 months. Some of the parts that require some lead time to order and deliver, that has gone up a lot. So I think our key pieces of equipment that we have where we thought was going to be 4 months is really more like 8 or 9. So we have to be a little bit strategic on when we make that decision to do the expansion. But to your point is that if you're in the process of building a mine right now, yes, there's a lot of exposure that you have to actual infrastructure costs. And it's not just like steel and works like that. It's like the labor availability to be able to do things. So we are very fortunate that this mine was able to be delivered, because if we had to do this this year, it would be more expensive. So by getting this mine delivered in March of 2021, we certainly saved millions and millions of dollars doing that versus doing it this year.
Talk about when you'll be making a decision about growing the mine from 500 tons per day to 1,000 per day.
It really is predicated on when we're comfortable having a Las Conchitas or even potentially San Albino North. So we've got one hole in San Albino North, but we are very optimistic that it's going to be there. But either Las Conchitas or San Albino North to be able to see, all right, we've got at least a few years of pretty continuous mining to increment our 500 tons of mining to 1,000 tons a day. And then we make the choice. So it's not capital constrained. It's just we cannot put ourselves in a position where we have to temporarily slow down, right? So if we're going to be making a 500 to 1,000 ton a day decision, we better have full visibility that we can account for those 1,000 tons. And it's just not going to be coming from the San Albino West Central and potentially Southwest and Northeast pits too. It's going to be coming from a different location on our property. And so from a timing perspective, the plan is to get a mineable resource out over at Las Conchitas the very end of this year. We should have enough data internally on this before then. So hopefully by towards the end of this year, we'll have enough data to support making the go-ahead decision. And then it's not like we're capital constrained. So as soon as we do that, we'll be able to start putting in the orders for long lead items and things of the sort.
Okay. And are you looking at any other properties, either adjacent in the region or elsewhere in Nicaragua or globally?
So I think it's clear that the gold is going off our property in all directions. There's like a funny anecdote about the press release that we just put out, which I won't get into. Let's just say we have pretty good evidence that gold is going off our property on government-owned ground. So I would love to expand our concessions in the area. So discussions are starting on that front. So those are the easiest types of acquisitions to make, is that it's stuff that that you own, and you're just going to have more of it, right? So those are it's easy to finance. It's easy to decide whether it's accretive or not when you have your stuff and then you have the same stuff over there. So those are very low hurdle rate type acquisitions that we can do. Then there's the next kind of like hurdle rate, which is something in the country where it might not be like directly abutting our concessions, but something that we can use our infrastructure to support. There's always potential opportunities on that front, and then the hurdle rate is lower than the next line, which is a different country, right? So I think, and I've said this for years, is that even if we do everything that we wanted to do over at Mako, we're still too small to be an ideally situated public company. I have no issues with doing acquisitions, mergers, or being acquired with companies with assets in similar or even different jurisdictions. I would say if it's a different jurisdiction, it would be somebody acquiring us, because I don't think we have the enough of a deep bench to be like going to West Africa, for instance. That's something that I don't think we'd be able to do. Now, it would be great. It's just we have to make sure that if you have a ruthlessly honest view of project valuation and what's there and willingness to transact, there are very few opportunities out there that have been interesting to us. There's a lot of things that look good on paper, but when you actually start pulling off the layers of the onion over there, and like I said, be ruthlessly honest with what people's assets are worth and even what your assets are worth, there's not a lot that was deemed to be accretive out there in the mining space. And then a large component of our peer group, who would be the usual suspects on how we looked at it, I think over time the data has proven us correct for being hesitant to do anything on that front. Those opportunities change relative to our cost of capital. If our share prices are higher, there's going to be more opportunities, and if our share price is lower, there's going to be less.
And in terms of things that you would look at, can you give us some of the parameters? Like, what do you think would be a good fit?
Right. So it's going. I think that the first two stages I think should be pretty obvious, right? It's like if we're just going to be buying more concessions next to us, then great. It's an easy decision for us to make relative to the price. If it's something going to be in country, that's also a relatively easy decision. Does it make sense with us? Like I've always been a little bit hesitant about being too big of a fish in a country, too big of a shark. A shark is a fish, apparently. too big of a shark in any single jurisdiction. But you know what? I think there are some benefits and synergies of having kind of like a local operation. It really is a much lower cost, both financially and politically even. Perspective to have multiple assets within a country. So I've definitely changed over the last couple of years in terms of my view of in-country acquisitions or mergers. And then on the outside, it's really what are we capable of doing? So let's say we're the acquirer. There's a limited number of jurisdictions that we feel comfortable operating with our current team. So United States, Mexico, Nicaragua, and maybe a couple of other places. If it's going to be a merger of sorts, unless there's a very good rationale, it's going to be unusual for us to give the keys to somebody else, right? So by merger, I mean like a similar size company or slightly smaller than that. We have no issues about retaining jobs and things like that. It's just it becomes difficult for us to have other people outside of our network and our sphere of influence to buy into what it means to run a public company, right? So I think people kind of get lost in this kind of weird gold business where they look at things in a different way than what how an investor would look at this. Everything that we do from an M&A and capital allocation perspective is coming at this from an investor's perspective over here. And if people do not get that from top down, it becomes a challenge to keep management. And that's why it's not a surprise that people have kind of like seen how we've operated over the course of the last 10 years, where we've had a lot of situations where we've had to replace management. I've had to fire the CEO of Marlin back in 2015 for cause. By the way, we don't kind of screw around with termination, give people going away presents for screwing up, but that happened. You've seen it in some of the other portfolio companies that we're involved with, where there's like a series of management teams that we had to get out because there's zero tolerance for making decisions that do not have anything to do with investment returns. And when decisions like that are made for whatever objectives that people have, we have zero tolerance, where I do think this industry has been a little bit too easy on folks with that mentality. If it's an acquisition of us, great. Like, and then that actually also, from that point of view, I'm less strict about jurisdiction. So there, by the way, and there are management groups that are excellent out there in the space. So there's a lot of like terrible management teams, but there's also a lot of excellent management teams in this space too. And if there's a company that has good-looking assets in different jurisdictions and a good operating team, and it makes sense for our shareholders to sell into that, we're happy to do that as well.
Okay. Staying sort of on a similar theme, I had an audience question. Once we're going at 1,000 tons per day and generating plenty of cash flow, would the company consider funding the development at sister company Bonterra? Maybe you can talk a little bit about how you view related companies, because there's a few sort of in the group of companies.
Well, they're not related companies, other than the fact that Wexford is the largest shareholder of both. So of Mako, they own 56%. Of Bonterra, they own 19.9%. I'm a non-executive director of Bonterra. I would say my level of board activity over at Bonterra was a lot more a year and a half ago, when I was kind of as I was suggesting, pushing out management teams over there. Now the board meetings are a lot more boring now that we actually have like a really good CEO there. But it does take a lot of coffee for me to keep from falling asleep in them. But no, there's, other than that, there's no relationship between Mako and Bonterra. So I don't see any situation like that.
Okay. And then I had one interesting question. Can we issue some one-time only Mako 1 ounce gold coins that we can trade Mako for a coin?
Probably not.
First, I'll make sure they get to shareholders.
Right. Gotta maybe print an NFT on that, like a nice little shark NFT. We'll figure out how to do that. But no, like for us, you do whatever you want with the hopefully the money that you make on the shares. Like eventually, when the debt is repaid and we have sustainability of cash flows to announce a dividend policy, you're more than welcome to buy whatever type of coinage or jewelry that you want with the money.
So a dividend policy, not a gold coin policy.
Exactly.
For returning capital. Maybe you could give an update on your thinking along the terms of returning capital to shareholders.
Yeah. So there's two bits of debt, the company level, right, which is actually much the Wexford piece is the one on top that says here US $9.4 million of principal. That's just over 7.5 now, after a couple of principal payments that we made. And then the 3.9 thousand ounces that are owed to Sailfish are down to like 3.5, I think, something along those lines. So it's a little bit of a moving target. The Wexford loan is due at the end of to April of next year. I think the plan is to fully repay that Q3 this year. So really all of our excess cash flow is going to be used for the Wexford debt. And then the Sailfish gold loan, which has, I think, 17, maybe 18 payments left on that will get of 205 ounces each. That will stay in place for the next 17 months. So there's not going to be any acceleration on that. I would say if I had my druthers, I would wait for that debt to be repaid in full, and then only after that to do a share repurchase. So we are authorized to do another 32 million shares for the next, I guess, 7 months, 6 months now, although that will get renewed next year. The only reason why there's preference for the debt versus the share buybacks is because the debt is costly, right? So it's just a capital allocation decision. The establishment of a dividend policy, and I actually get into discussions with even Wexford on this, is that I'm pretty adamant about it, is that I want to have the ability to have forecastable cash flows. So we could talk about like the orogenic camp, have millions of ounces of gold, mining this for generations. Everything I said, all of the data is supporting that. But that is a very different arm waving exercise. And to say you have the ability to forecast a 3-4 year mine plan, that requires a lot of drilling, a lot of work, a lot of engineering, a lot of planning in order to get there. And then once we get there, then we can underwrite a sustainable dividend policy, knowing that we're always going to be replenishing the ore in the ground to make that 3, 4, 5, 6 year mine life in reality replenish it for generations over time. So it's really that is the time frame that we're going to be transitioning from mostly share buybacks to the dividend, is to never put ourselves in a position where either our dividend is too absurdly low relative to our cash flows because we're being conservative about our payment, or that we ever actually have to pull back on it because we have to slow down because we don't have enough visibility into the next 2, 3, 4 years of cash flow. So that's something that will happen over time. And this is not like years and years and years. It's something that will happen over the course of the next year and a half, 2. So it's in the intermediate term, there will be a transition to a sustainable dividend policy, but we're not there yet.
Makes sense. And I don't believe that we've talked about the political situation in Nicaragua right now. Can you give us an update?
Yeah, I mean, as it relates to the mining community, it's been, as I said, it's been fantastic. So we do have the ability to have constant dialogue with the community, with the government. If we ever need like a permanent amendment in order to go and eventually mine San Albino North, we're going to have like minor permit amendments over there. So those discussions are happening. And I think people kind of confuse like the broader political situation in the country with how it influences mining, right? So there's the broader side of things where there's a lot of valid reasons to criticize what's going on, which is something that I'm not going to do in a forum like this. But as it relates to mining, it's really just been a pleasure to operate in Nicaragua. It's as simple as that. And I think this is one of those issues where investor. Look, I used to be an investor. I'm very sympathetic to it, but unless you go through the process of trying to build a mine, I think people conflate broader sovereign political risk with mining risk. I think people also conflate where you want to go on vacation to mining risk, right? They're two very, very different things. Like I would much rather build a mine in Nicaragua than Costa Rica, right? It's like, I think Costa Rica is a wonderful place to go on. I went on my honeymoon in Costa Rica. It's a beautiful country. I do not want to build a gold mine there. Nicaragua is a wonderful place to operate mines. We try to develop mines in the United States and Mexico. There are challenges, very different challenges in both countries. But you know what? Nicaragua, if you look at this based on the evidence from a discovery to mine development standpoint, and look at that in the context of how long these projects take, Nicaragua is actually less risky. And people are going to take the words out of context over here, right? So like if I had an operating mine in the United States that's fully permitted and full social, everybody is like, it's like, that's one of Barrick's Nevada mine. I would much rather have that. Like, don't get me wrong over here. But starting from a period of discovery, which is where we are over at Mako right now, to be able to get things into production. It's why I can make statements like at La Segoviana is that I anticipate this being a mine within 3 years. I would never be able to make a comment like that in the United States. And Mexico has its own very, very disparate challenges over here that I don't even think the investment community has even an inkling of what's going on in that country at this point. So it's like Nicaragua is a wonderful jurisdiction to be in, and we've been happy to be in this country.
I don't disagree with you. I mean, when was the last time a mine was fully permitted and put in production in the U.S., right? It doesn't happen that often. I guess the question that people really are getting at is, with the current political situation with Nicaragua's support of Putin, does that affect you in terms of any embargoes or risk there?
So certainly from a risk perspective, yeah, no, it's elevated. And I think, like, broadly speaking, the world is moving in two directions. I don't think there's any other way to describe it, like East and West, right? Let's say the power centers for both the United States and China. Like, for instance, Nicaragua only late last year formally stopped recognizing Taiwan, right? And then in order to facilitate a close relationship with China. And well, guess what? It was the same policy the United States had since the early 1970s over here. So it's not like it should be a shock to anybody, but they definitely made a decision. And then there's a long history in Nicaragua. And in fact, the history of Nicaragua goes back to our mine, back the original civil war in 1927 over here started a series of government changes and revolutions and counter-revolutions associated with it. And in doing that, this country got caught up in broader geopolitics, and Nicaragua has, I think, made a choice to be a little bit closer aligned to the East versus the West. And with that comes the risk of sanctions, which exist in Nicaragua. But in terms of how it's affected us, now that we've built the mine, I haven't really seen anything. We've had, I would say, we have less banking relationships than we probably would if we were in a less sanctioned country. I would say if we were looking for capital, we would have less debt providers that would be looking at it. So, like, on the margins, it affects us, but brass tacks, as it affects us on the ground, I really haven't had any negative experience or effect really at all.
Okay, I think that thoroughly covers that line of questioning. I guess the only thing that we really haven't talked about, Akiba, is share price. There's been some interesting action lately. Maybe you could talk a little bit about why you think the share price has been range bound and sort of the dynamics that are potentially changing in the market.
Well, I mean, going back historically, I use this slide as the make fun of Golden Rain director slide, right? So by the way, all the Golden Rain employees were fantastic. Like Zorn and the geological team that he was able to recruit and train have been fantastic. But the predecessor company was managed and owned in a very strange fashion, to say the least. But they did own a lot of shares. And I am not shy about kind of saying that they made a lot of managerial errors over there. So the relationship that I had with a lot of the key shareholders from the Golden Rain side was not pleasant, to say the least. Right? We actually forced one of the key directors off the board at the end of 2019. So part of that is them kind of being in the market, selling the shares when they get to a certain level. So that's kind of like where it is. And then I think with respect to the share price, to me, if we needed to raise capital or we needed to do M&A or something along those lines, I would be very concerned kind of where the share price is. But for us, we have a 5-year plan. And like at the end of the day, the shares will reflect everything that we have. But I would caution people is that this company really started in 2019 with the management changes. Anything that happened prior to that, this wasn't a viable enterprise. It didn't have the right data and engineering team, management ability. The direction of the board was all over the place. Prior to the merger, you had a stream that rendered the project uneconomic that was restructured as part of the merger that happened at the end of 2018. So what happened prior to 2019 was frankly irrelevant. This company was not going anywhere with that management and board structure with that stream in place. So when the objectives of the company were laid out, the share price re-rated. And the way that I describe it to all shareholders is that we have three objectives over here. It's building the 500 ton per day mine, getting it up to scale, a level of materiality in the context of global mining, and proving that this is an orogenic gold mining camp. Back in 2019, people weren't valuing any of it, right? So there was a wonderful opportunity for people to buy shares. I bought, it was in the open market, bought millions and millions and millions of shares on my account, my personal account at that point in time, because none of those three objectives were being valued. At the end of 2000 or the middle of 2020, the mine was being valued fully. And then frankly, it was probably even valuing a little bit of the Las Conchitas expansion as well at that point in time. But the mine wasn't built in the middle of the pandemic. And we certainly didn't have the opportunity and the capital to go and seriously invest in Las Conchitas at that point in time. So great. That probably meant the company is probably a little bit expensive in the middle of 2020. Now, I think the market is valuing the mine appropriately because the mine is built and effectively de-risked, and it's not really valuing anything else. It's okay if the market does that. If the market only wants to give you credit for things that you prove, I have no issues of proving it to the market over time in the context of our 5-year plan, because I know the shares are going to reflect it over time. What I have an issue with on some of the share trading is not the valuation. What I have an issue on the share trading is that sometimes because of personal issues, like we're going talking about over here, that sometimes the data that comes out of the mine is not reflected, good or bad, in the share price, and then people invent stories about the data, right? So we've had weird situations where the stock price was going down. It's like, oh my God, what is going on at the company? It's like, nothing, like everything was going well over the company. Just the share price was going down. Two completely independent things. And then people need to look at it in the context of an illiquid stock, is that you have the business. Sometimes the business reflects the stock. Sometimes the business is undervalued relative to the stock. Sometimes the stock is overvalued relative to the business. And it happens all the time. And I think as investors, especially in a liquid name like that, understand what you think the business is worth. You might have a different opinion about how much each one of those stages is worth to you. And if the company is cheap relative to how you underwrite the business, it's a good time to buy more. If the company is expensive relative to how you underwrite the business, it's a good time to lighten up. That's what stocks should be as investments.
So by that rationale, if the share price is currently only reflecting San Albino as it is now, then the discoveries that you're hoping to make in the other regions this year should create share price catalysts, as long as you don't have manipulative selling.
I wouldn't call it like manipulative. I would say it's a little bit of a needling, certainly, but not manipulative.
So those should create share price catalysts, and then expansion of the mine, you think, also should create value.
I remember talking to people back in 2019. Our stock was at 9.5 cents. It's pre-financing, so we raised $40 million US dollars of equity capital. So that 9.5 cents probably translated to a $25 million market cap at the time. I told people at the time, I think this is a $500 million to $1 billion company. We're going to have to finance this, which means I think the shares go up 10x, and if we get lucky, it's going to require luck. Could potentially be 20x from there. I haven't seen any piece of data to move me away from that. But I will say in that anecdote, is that the initial response that I got from people was like, whoa, from your lips to God's ears. It's like, no, it was based on the data that was kind of existing on the ground at the time. And then there was like a valid path and kind of we needed to execute in order to get there. But I do think stock prices can play with people's minds, is that they're very powerful at framing how you think the companies are. So some of our biggest bulls today were like, whoa, you really think this is going to be $1 stock? Now they're saying $1 is cheap. It's like, because the stock has gone up 4x. So that's why I think it's important to see what exactly is the business that you're investing in? What exactly is the goals and the execution of where it needs to be? And let it be underwritten appropriately. There's a lot of risk that goes into the execution of all three objectives. This is not going to be like a cakewalk for us to get to a $500 million to $1 billion company. We have to execute and we have to prove that how we underwrote this transaction was correct going back to 2019. But in terms of how we've developed since then, it really, in the context of the global pandemic, in the context of exogenous things being thrown at us over the course of the last couple of years, as every mining investor should expect, I don't think the underwriting was bad at all in 2019. So I think everything is kind of like going according to our plan.
Reflecting back on the last 3 years, what would you have done differently that is within your control?
If the question was what would I do differently, like 10 years ago, there's plenty. But specifically with respect to getting Mako up and running. So there's obviously a lot of mistakes that were made in the Marlin iteration of this. But specifically over at Mako, I think this has gone according to plan. I don't think we had the capacity, currency, share price to do any acquisitions. So there was nothing that I felt like we missed. Right. So those are usually the things that keep me up at night. It's usually not the mistakes that I make on the ground. It's usually like, wow, we really could have bought that. That could have changed. I have none of that over the course of the last 3 years. I would say I would have probably liked to get rid of that director a few months earlier than we did, but at the end of the day, he left in pretty good spirits. So, but honestly, with respect to Mako, there really hasn't been anything that looking back I would have changed. Obviously, we did not know about the global pandemic kind of in the middle of building this out, but how we went about this was how we should have. We got the data right, got the geological model right, got the engineering right, built this under very challenging environments correctly, use the information from our mine to go and make intelligent exploration decisions, use the cash flow from the mine to follow up on those intelligent investment exploration decisions to do a more broader big boy program over there. And then I think the data that's going to be coming from that program is going to prove our underwriting correct, that this really is an orogenic gold mining camp where it's going to be unusual if this didn't house millions and millions of ounces of gold when all is said and done.
Awesome. Well, I don't see any other audience questions, and I think you've taken us through the story very thoroughly. Normally I would ask you to list catalysts, but I think they're pretty obvious. But yeah, maybe just rip through them again to keep investors paying attention.
Yeah. So the mine is the mine, right? So we have a 500 ton per day mine. It's operating over at steady state. But there's a lot of things that we've learned about the ore body in time. I was telling you earlier, Deb, that we've probably finished about 80% of the oxide of the resource, and now that we're in the fresh material, so we have to be a little bit sharper on how we operate the plant. I think the oxide is very forgiving, and then the fresh material, you need to be laser focused on how you're handling that material to make sure that your optimized recoveries are what we expect. And to put that in reference point, when we put out our metallurgical results at the end of 2019, we expected about 94% recoveries in oxide, about 86% in fresh material. It's going to be kind of where I think we did a good job of doing that metallurgical testing and plant design, but it's operations. This is the stuff where you got to roll up your sleeves and make sure that your data management over here at that plant is sharp, because the easy stuff is now gone. The good side of that is that the plant, we now have a team. Like before, we need to get people trained up and kind of understand how the plant works. Now we have the team there. Everybody is like doing a fantastic job from a human resources perspective in that regard. And then it's the real meat of the company is the exploration side, and then that's twofold. It's Las Conchitas and the resource that we're going to be putting out this year. And like I said, everybody on this call, go look what happened in 2020. People were going crazy about oh my God, the resource is so small, blah, 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 blah. It was like, it was a challenge over at the time. The same thing is going to happen this time around. It's because the way that we approach resources is fundamentally different than how our peers approach resources in this business. We are not putting out resources in order to goose somebody into buying us at a price that's higher than what we are worth. We're putting out resources because we are mining them, and we are not going to be screwing that up. And then there's the real blue sky stuff, which is the orogenic stuff, where there's areas of a property that are clearly there that will have economic deposits that have not had a drill hole placed in it to date. There will be discoveries that are made, and then that really is the lifeblood of any company. And if we make a material discovery, which we expect, it will be reflected in our share price.
Mako another mine.
Mm-hmm. Exactly.
Great. Well, I think the only thing that we haven't talked about is I think you're doing some video site visits coming up. So obviously not a lot of people are traveling to Nicaragua right now, but at least we can give them a look at what the project actually looks like. So I think that'll be really exciting. So I think that'll be out sort of early summer.
I think everybody's going down to site last week of April. So I don't know what the production schedule is, but I would imagine early June.
It'll be great. Maybe I'll go. It's been a couple of years. I do miss it. It's such a beautiful area. But yeah, thanks for your time, Akiba. If anyone has any questions that weren't answered, feel free to reach out to myself or Akiba, or you can just message him on Twitter. And yeah, thanks for the update. Really appreciate it. Thanks everyone for your time.
All right, take care. All right, thanks, Deb.